If you own a business, the last 60 days of the year are the real tax saving happen. You can't change what already booked, but you still have time to control how much income you report, how much you deduct, and how strong your record look if the IRS ever audit. In this video, we are diving into the 5 December deadlines every business owner needs to hit before year end. We will walk through each part step by step so you see what to do, why it matters, and how to actually implement it in time. Here's the roadmap. Part 1, reimbursement under accountable plan. Part 2, final payroll and bonuses. Part 3, equipment write-off using bonus depreciation in Section 179. Part 4, clean up your books. And Part 5, January reporting prep for 1099s and W-9s. Stick with me through all 5 parts because missing even one can mean leaving thousands on the table. Let's start with the most forgotten deduction, the accountable plan reimbursement. Now we move to part 1 to discuss the accountable plan reimbursement. If you or your team pay business expenses personally like phone bills, internet, home office, client meals, or travel, they must be reimbursed under an accountable plan before December 31st to be deductible for the business and tax-free to the employee. Here's an example. A small graphic studio in Denver realized in mid-December that employees had been paying for Canva Pro, parking, and client coffee meetings all year. They used a simple Google form to collect receipts, paid out reimbursement on December 28, and documented everything to QuickBooks. The reimbursement turned nearly $9,000 of missed deduction into legitimate 2025 write-offs. Here's how to do it step by step. 1. Review court statements for unreimbursed expenses. 2. Ask employees to submit receipts and short explanation of business purpose. 3. Issue reimbursement check or payroll reimbursement by December 31st. 4. File the receipt digitally and update your accounting records. 5. Make sure your company has a written accountable plan policy. It's a simple one-page document, but it makes all the difference if the IRS ever asks. Remember, reimburse before the calendar flips. When it's January, those 2025 deductions are gone. Now that reimbursement are out of the way, let's talk about the second most time-sensitive move, payroll and business bonuses. So let's move on to our part 2. Your W-2 total are only as accurate as your final December payroll. If you are an S-Corp owner or you pay employees, every wage, bonus, and adjustment must hit payroll with a December check date to count for 2025. Here's an example. A boutique interior design firm in Atlanta wanted to reward its staff with $25K in bonuses, but didn't schedule payroll until the last week of December. By planning a special pay run on December 27 and confirm with their payroll processor early, they locked in their deduction for 2025. If they waited until January, the same bonuses wouldn't have been helped with this year's tax bill, but you can deduct it next year if that's how you intended it. Here's how to make sure you get this right. 1. For your year-to-date payroll report for employees and yourself. 2. Finalize any bonuses or benefit adjustments now. 3. Schedule your last payroll run for a check date in December. No exceptions if you want to get that expense for this year. 4. Confirm all W-2 gate details like addresses and benefit codes are correct before year end. Some bonus tip for you: if you are on accrual basis and can't pay until January, you might still be able to accrue bonuses under the 2.5 month rule, but related party rule often block this. So paying by December 31st is the cleaner and safer for small businesses. We have COBRA, reimbursement, and payroll. Next, let's hit one of the biggest year-end moves, the equipment deadline. So let's move on to part 3. This part we're gonna discuss equipment, bonus depreciation, and Section 179. The One Big Beautiful Bill Act that was signed in July restored 100% bonus depreciation for assets acquired and placed in service after January 19, 2025. So that means if your new equipment is up and running before December 31st, you can deduct the full cost this year. So placed in service means installed, functional, and ready for use, not sitting in a box or on a purchase order. Let's look at an example. A construction company in Phoenix purchased new tools, generators, and office furniture totaling 120K in mid-December. They pushed for expedited delivery, verified everything was operational by December 30th, and kept delivery slip and photo on file. By doing so, they deducted the entire amount for 2025, cutting their tax bill by over 30K. Here's your checklist. 1. Identify what needs replacing or upgrading. 2. Place your orders now and confirm delivery before year end. 3. Take photos or keep signed install confirmation proving placed in service. 4. Decide whether to use Section 179 or bonus depreciation or both. Section 179 allows up to 2.5 million in expensing for 2025 with a phase out starting at 4 million, while bonus depreciation had no dollar limit. 5. Update your depreciation schedule in QuickBooks or your fixed asset tracker. The bonus tip for you if you are considering vehicle, check the weight classification. SUVs over 6,000 pounds can qualify for 100% bonus depreciation, but cars under that limit are capped. You want to document your business use percentage carefully. Now we have done 3 parts so far. We have already covered accountable plan, reimbursement, payroll, and equipment deductions. So let's keep the momentum going with part 4, cleaning up your books. Think of this part as your year-end financial reset. Clean books mean fewer IRS questions and faster tax prep. Here's what to tackle before December 31st. Plus account receivable. Decide intentionally which December invoices to send. Cash basis businesses can legally defer income by invoicing in January instead of December as long as it's consistent and documented. Second, accounts payable. Pay outstanding bills now if you want to claim the deduction for 2025. Third, prepayment. Under the 12-month rule, you can prepay for things like rent, insurance, or software as long as the benefit doesn't extend beyond December 2026. 4. Write off bad debts that you have determined as uncollectible. 5. Adjust inventory for shrinkage or obsolete stock. Let's look at an example. An online retailer in Portland ran a end-of-year clearance sale to reduce overstocked items. They wrote down unsellable goods, sent final notices to overdue customers, and prepaid 1 year of insurance under the 12-month rules. By documenting every step, they reduced taxable income for 2025 by about 80K while starting the new year with clean books. Here's your step-by-step. Run your account receivable aging report and note who hasn't paid. Run your account payable list and decide which bill to pay now. Apply the 12-month rule to any prepaids. Count physical inventories and record any adjustments. Store every supporting document in one cloud folder for easy access later. Some bonus tips for you. Use this time to back up your QuickBooks file and log the books. When you are done, it's a simple safeguard that prevents accidental editing after filing season starts. We are almost at the finish line. The last part of your December plan is all about preparing for January reporting, so your 1099s and W-9s. If you paid independent contractor $100 or more during 2025, you must file Form 1099 NEC or NEC. The due date for 2025 payment is Monday, February 2nd, 2026, since January 31st fall on a weekend. Let's look at an example. A catering company in Chicago works with freelance chefs and delivery teams throughout the year. In early December, they export a vendor payment summary from QuickBooks, identify who crosses the $600 threshold, and send digital W-9 requests to the accounting portal. By January 1st, everything is verified, no scrambling, no late fees. Here's how you can do the same. Run a report for vendor pays more than $600 this year, request missing W-9s and verify taxpayer identification numbers, confirm addresses and e-file readiness. Mark your calendar for the February 2nd deadline. If you file 10 or more total information return, e-filing is mandatory. Forward-looking, let's starting with 2026 payment and reporting threshold rise to 2,000, but now 600 remains the rule. So next year in 2026, you're gonna have a little more leeway because the threshold for 1099 reporting increased to 2,000, but 2025, what we still worry about, you still have the old $600 threshold. So we just walked through the 5 keys deadline for business owners before December 31st. So let's quickly recap and finish with some bonus strategies. So far, if you like the video, like, share, subscribe. Share it with somebody you love, somebody you care, especially business owner that this may be critical for them to close out 2025 strong. Let's look at our 5 key deadlines. So 1, reimburse business expenses under your accountable plan. 2, run your final payroll and bonuses before December 31st. 3, place equipment and service and claim your 100% bonus depreciation or Section 179. 4, clean up your books, account receivable, account payable, prepaids, and inventory. 5, gather W-9s and prepare your 1099s for early filing. Now for a few extra moves that can make your December planning even stronger. There's some bonus strategies for you. So number 1, combine Section 179 and bonus depreciation strategically. Use 179 for assets like office improvements or certain properties. Bonus doesn't fully cover. Then apply bonus depreciation on the rest. Bonus strategy number 2 for you, check your state conformities. Some states don't follow federal bonus depreciation rules, so Section 179 might save you more locally. Next stop, number 3, manage cash basis timing. So pay bills before December 31st for current year deduction and wait until January to deposit payment if you want to defer income. Number 4, build a documentation vault. Create one December folder labeled 2025 year-end close and store every invoice, receipts, photo, and memo. Number 5, schedule your January and February tasks now as reminders to your first 2026 payroll, 1099 filing, and quarterly estimates. Now you have a complete roadmap for the final 2 months of the year. So these are the same strategy accountants use behind the scenes to protect deductions, reduce tax liability, and make next year filing easier. Every step like reimburse, pay, record, and document can move your numbers in the right direction. If you want tools that make the task faster, check out our templates and checklists at Pro Deductions on Etsy. You will find the Accountable Plan Toolkit, Fixed Asset Tracker, and 1099 Readiness Kit ready to download. And if you would like to learn advanced strategies and hand-on walkthrough for business tax planning, visit accesswiteinstitute.com. You have just 60 days left in 2025 to make this count. So reimburse, record, and review now. So when January arrives, your books are clean, your plan is solid, and your tax bill is lighter. Thank you for watching. I'm Mia. I will see you in the next video.